So last week I did a video for insurance agency owners who are considering selling their business in the future to really focus on the importance of your profit margin over the multiple of EBITDA that you might receive in the future from a prospective buyer. One, because it's somewhat in your control, and two, because it has a significant impact on the overall proceeds. I had a lot of questions that came off of that, and I want to hammer one point home, and that is you should never, ever, ever compare the multiple that you may get with someone else. If Jimmy Insurance Agency comes to you and say, I just sold my business for 12x EBITDA, give him a high five, buy him a beer, good luck with your next chapter, Jimmy, but don't ever let it get to your ego or hit your ego or compare that to a potential multiple you may have sold for, may receive in the future, or have already received, because there is no way to know it's apples to apples. And I'll give you an example why. And I'll touch on our process, Legacy Advisors, and how we support clients from end to end in the future. But I'll fast forward to the LOI comparison step, which is really when we receive multiple offers from various buyers that we've already established will be really good fit for our clients. And we're putting them next to each other and evaluating the merits of those offers, from deal terms to structure to equity and cash splits and earnouts, et cetera. Let's just say we have 3 offers for a particular agency. All 3 of them have identical upfront guaranteed proceeds in cash and equity. Let's say it's $10 million. The first buyer might back into an 8x EBITDA multiple in their LOI. And that might be off of the pro forma adjusted multiple of EBITDA. 8x gets to $10 million. The second buyer might actually back into their trailing 12-month EBITDA margin before the adjustments were made in our pro forma, and that might generate a 12x multiple of EBITDA. The third might take $10 million proceeds, add to that key potential earnout proceeds in 3 years from now, based on the company continuing to grow at historic rates, as well as the equity that's received up front, that continuing to appreciate based on historical rates. Taking those 2 numbers, adding it to the upfront guaranteed $10 million, backing into a 15x multiple. Same agency, same upfront guarantee, 3 different ways to look at it: 8, 12, 15x multiples. You should never, ever, ever compare the multiple you receive, because you really have no idea how someone else got there.